Good morning. Today is April 11th. It is 9:57 a.m. Pacific Standard Time. Happy Tuesday to all my listeners out there. Uh, let's get into it. All right, so right now we're looking at gold versus the US dollar. This week, we have had a little bit of momentum. This is Monday, so we've got, price really moving sharply down here and up. And from the review that I did a couple of days ago, or just yesterday, I was anticipating looking for entries between 94 and 96, and then again at 99, based on this price action here. However, price did continue to bust on through, and I did learn a couple lessons on those opportunities. We have a deep retracement, and here we are again to push it on out. Now, as you can see, if you're a reverse trader, this is an inverted head and shoulders pattern, clear as day. You don't really notice it until about 6 a.m. with this candle printing here, showing that we're clearly moving into an upward momentum. Then we've got another strong bullish candle close. Here is our breakout zone. All right, so jumping out to the 1 hour on gold, we can see that price wants to continue to move up. Our next targets can be at the 2014, 2018, and 2027 levels, potentially. I'd like to see price come to like 2022, 2024, stay in play for a little bit. It just all depends on overall price action. Looking at the daily, this overall doji candle here and then this bearish push down is what really led me to believe that gold was on the move to the downside at such an important level here, the 886. I just honored the confluence. So following my trade system, I executed on those trade opportunities, and price did move down substantially. I just was a little late in the game for this opportunity. So price respected in 1989 and can continue to move upwards. I do see that we have some nice channeling going on here. Could be something similar to the channeling that we have here with a drop, retest, sharper move up, and then the overall move down. That could be something that we're preparing for. However, let's just keep a good look on gold this week. So it's still Tuesday, technically for another few hours or so, about 4 hours, for everyone in the world. Or I don't even want to make such a broad statement. Anyway, we have some FOMC speakers talking today about economic outlooks. No stories have been posted yet. IMF meetings. Let's read this article here. So always do fundamental analysis. I highly recommend fundamental analysis because it really allows us as traders to have a better idea of the market sentiment and the things that are happening within the market so that we can overall make better informed decisions. So the weakest global growth expectations in more than 30 years. Global growth is expected to be around 3%, which is also another low. The world economy is not expected to return over the medium term to the rates of growth that prevailed before the pandemic. The weaker growth prospects stem from the progress economies like China and South Korea have made, increasing their, let's see, this is what I should have did to begin with. Okay, anyway, so, all right, so IMF says 5 years from now, global growth is expected to be around 3%, lowest medium in over 30 years. Fund expects global growth of 2.8 this year and 3 in 2024. Assumes that recent financial sector stresses are contained. So they're citing slow global labor force growth and geopolitical fragmentation. So I don't want to assume anything, right? Let's just take this over here and look at what is global labor force growth. Labor force. So like labor force is, the people, human capital that, work the jobs, that do the work. What do they mean with the growth? Okay, so labor force will continue to age with the average annual growth rate of 55 years or older to be 1.8, more than 3 times the rate of growth of the overall labor force. Okay, so how does that bringing it back to gold? How does that affect gold? So, um, as we're facing more economic uncertainties, people like to venture off to quote unquote safe havens. So, some people might veer towards gold, a solid asset that, some people might say that gold always retains its value. I'm sure that's something that people typically say, or you may have heard. Money markets or real estate have been things that people talk about in terms of, future investing in times of economic uncertainty. So let's go back here and just see what else it says. So tight policies needed to bring down inflation. Recent deterioration in financial conditions, ongoing war, geoeconomic fragmentation. These are the things that are going to stunt the labor force growth, or that are, that are the general concerns about the economic uncertainty that, we're facing as a global society. Got bank failures causing volatility across global markets. That one's been a really big one. And even though it's not like on here. We also want to reference in our minds the crypto, quote unquote, bank failures as well, crypto exchange failures, where, it's caused a lot of uncertainty, a lot of upheaval, a lot of emotional distress is out there because of things that are happening out there in the markets. So higher interest rates raised by central banks battling to bring down stubbornly high inflation are hurting companies and national governments with high levels of debt. I think that the language is something to, really note here. Where we're talking about sticky inflation, preserving financial stability. Global inflation is expected to drop from 8.7 from last year to 7% this year as energy prices come down. However, core inflation, which excludes volatile food and energy costs, is expected to take longer to fall. Does not expect headline inflation to return to its target levels before 2025. So it's 2023. Okay, so our market, analysts and, people that have really developed and designed the financial markets are putting out messages of concern, which, nothing to be alarmed about, but we have to be savvy investors. We have to be conscious and able to participate in growing our global economy. And if labor force growth is something that is of concern, then I think that also brings up the conversation of personal economy. And this isn't meant to be super political. We're going to stick to the analysis, but that's the point of, why we do the analysis, why we're having this conversation. I think that anyone increasing their personal economy is overall doing doing something well for society, doing something well for themselves, um, and overall that's a good thing. Okay, so not to push any like political jargon down your throat here. We're looking at the charts. But again, that's just so we can have a good market sentiment on the fundamental basis of what's happening right now in the markets. Is there anything else? This is my first time really looking at Reuters for today, so let's see what they have here. So as we're seeing that, the yellow folder news, the IMF, is out. It's front page news. People are talking about it. And this is overall what's going to start to affect, this news. While it might not be super important to you or me or anyone, but the people who are talking in these later reports, doing these things, they care about what the IMF is saying. They care about those, long reports and news articles and things that come out in that basis. And so that's why this red candle folder or red folder, orange folder news is so important. But to me, the yellow folder is equally important too. I think it's like the foundation or the basis for these other types of news. Or when people speak and you can experience random volatility in the markets and things like that. Yeah, it's just a lot of a lot of things that are happening right now. Okay. Don't overdo the negativism. You're vigilant to downside economic risk, but don't do the negativism. All right. Wouldn't overdo the negativism about the global economy. Think we should be more positive. Hasn't seen evidence suggesting a squeeze in credit after 2 U.S. bank failures last month, although it was a possibility. U.S. bank system remains sound with strong capital and liquidity positions. Financial system is resilient due to significant reforms enacted after the 2008 financial crisis. Solid job. U.S. economy is solid with job creation, inflation gradually moving down, robust consumer spending. Not anticipating a downturn in the economy, although of course that remains a risk. Ending the war would be the single biggest help for global economy. Labor market was strong. Inflation remained too high. So there are steps to increasing supervision of mid-sized banks that don't require approval by the split Congress. So it looks like, there are some good things. We were just reading about, some of the negative stuff, right? And we know that there are, it's a spectrum. There's the good and the bad. So we saw the negative, or what can be perceived as negative news, and then here we are looking at some things to counteract that into positivity. All right, so all right, so more things in geopolitics, debt overhang, debt burdens. Let's see. More stuff about the war. I mean, stuff is consistently in the market now. All right, so here we are back at gold, and I'm gonna go back to the 30. I thought I was noticing a cool entry. Based on my strategy. But hey, as we know, the markets do what she wants. So I entered into a position expecting price to go higher. And here we are having a drop off. And that's just the reality of the situation. All right, so I'll end with that. If you or someone you know wants mentorship, please feel free to reach out to me, leave a comment, or send a DM on Instagram at Smile Love Succeed. Thanks for watching.